I'll to record again. So, afternoon everybody, or good morning, or good evening, wherever you are in the world. It's Stuart here from HotForex. Today we're going to be looking at the CCI, or the Commodity Channel Index, and the Williams percentage range, put together by the infamous, or the great trader, Larry Williams. So two very simple oscillators, also good for trends, but sort of indicators on that you can be used on their own or with other indicators. Obviously, it's all about setting a system that fits you and you like, and it works for you in your time frames and your trading horizons. So it's really, as ever, it's always about you, this trading. There aren't any perfect indicators, so don't expect an indicator to work 100% all the time, or even 80 or 90% all of the time. But anyway, we've got the same problem we had yesterday. There we go. So usual admin before we get going. Any issues with GoToWebinar, or try restarting your system, which I had to do a couple of times, which is why I'm late this morning today, so apologies for that. Any questions I don't answer or aren't clear through the webinar, it's my fault. I'm the teacher. So email me at webinars@hotforex.com. If I'm speaking too quickly, please ask me to slow down, and we can go over things as many times as you like. We've got an hour or so, so it's up to you guys here. We're here for you, remember. Trading is risky, so make sure you understand and appreciate this disclaimer. Excuse me, I've got a bit of a sore throat today. So, as I say, trading is risky. Make sure you understand the risks involved, and make sure, as I say every single webinar, you understand yourself. My idea is all about, if it's probable, I'll take the trade. I try to keep things as simple as possible, and these indicators today are fairly straightforward. You can, I say, use them on their own, but it's always recommended to use them with some other indicators. Look at multiple time frames. Again, these indicators we look at today, different settings work well on different time frames, everything from 5 minutes up to daily and monthly charts. That's all indicators are. They're literally that. They're giving you an indication what might happen. But the most important thing is to know yourself. Accept that you lose a lot in this business, and it's just part of the business. Write a trading plan. You win some, you lose some. Keep your losses small, and you live to fight another day. It's all about understanding the very basics. If you don't understand the basics, and they're not like second nature to you, and when I say the basics, I mean things like margin, spread, leverage, and lot size, particularly lot size. Trading too big a lot can very quickly empty your account. All about risk management, all about knowing yourself, and it's all about psychology of this business. But that's a whole webinar for another day, and I can talk for days and days about that. But anyway, today it's about some technical indicators, commodity channel indicators, and alternative indicators, I call them. The commodity channel indicator. Lots of people look at, it's not Chanel indicator, is it? It's commodity Chanel indicator. It's channel, I should say. A lot of people look at it and say, oh, well, it's obviously just for commodities. It was designed or started for the commodities business, but really it's applicable across all assets, forex, equities, indexes. Works really well, some particular indexes, things that trade very well, like the DAX or the JER 30 and stuff like that. So, and then Williams percentage R. So Larry Williams invented this a few years ago now, and again, it's perhaps a bit simpler than the CCI, but used just as effectively on oscillating as well as ranging and well as trending markets. That's the beauty of it. It's all about momentum. So alternative indicators, different view of technical indicators. So I don't know if any of you used these before or whatever. So before I get going, do any of you use the CCI or Williams percentage R? Have you heard of them before? Or is this all new for everybody? No. Another no. Okay, so it's new for everybody. Okay, they're just another indicator. They're on your Q says he has used them. Okay, that's one of you. Okay, that's a no. So basically, it's just another set of indicators that you can apply to your charts. If they don't fit, they don't seem intuitive to you, try and try something else particularly. But anyway, CCI Williams percentage. So, they're very easy on your MT4 or your MT5 platform. Oscillators, they're in the oscillators bag, so they tend to work best when we've got ranging markers. But these two, as we'll see later, work quite really well on trends as well. So, and oscillators, by their very definition, most of them, all of them, not all of them, but most of them, 90% of them, are bounded indicators. So they go up from 0 to 100 typically, not always, but typically they're in a range of 1 to 0. And as we see with the Williams later, it's, you know, the trigger is this minus 80 and minus 20 overbought and oversold. So that's really what they're all about. Others are not necessarily bounded, but typically we have a bounded indicator. It means it's range bound is all that means. Okay, so commodity channel index, created by a guy called Donald Lambert, and this is the textbook definition of it. I couldn't find. I tried to retype it myself, but I took this out of another presentation. So, measures the point at which cyclical price reversals for a given asset can be expected. One of the fundamental assumptions behind CCI is that price tends to reverse at regular intervals within an asset, allowing investors to take the appropriate action when CCI indicates that one of these cyclical reversals is imminent. Okay, in simple plain English, that means nothing goes in a straight line forever. Okay, so whether we're trending or whether we're going in a sideways market, you know, you can catch some of these reversals. So if we've got a sideways market and we've reached the top, there's quite a high probability that we're going to go down. Okay, if we reach the bottom, there's quite a high probability of going up. So these circles, these cyclical markets. Similarly, and exactly the same in fact, is if you've got a trending market, again, it doesn't go in a straight line forever. So the higher time frame, the weekly, the monthly, the daily, may be still going up, but there are reversals within that trend. So we go up and we catch some of these reversals, and that's what these CCI and the Williams percentage can help you with, give you some sort of indication for it. Okay, so that's all that means. So it's not just for commodities, and it's about catching reversals in cycles, because markets go up in cycles. They go up, you know, cycles within cycles, or circles within circles. You can see as markets go up, they go up in little circles within a bigger circle, perhaps, or a bigger range. And the same when it's coming down, and the same when it's going sideways, circles going sideways. So really, you know, how far's the trend run, and as it got a bit overheated on a short-term basis, so looking to catch some of the reversals. Again, lots of trend traders wouldn't necessarily use this, they wouldn't be interested in it. They're just happy to get in and stay in and look at the longer-term trends, but that, you know, perhaps doesn't generate the amount of signals and the amount of trades that you can cope with, because again, it's all about you, and it's all about finding the patience and the discipline to trade the system that works for you and works for your time frame. So this is the maths behind it, basically, and again, this is straight out of the dictionary and the encyclopedia. So it's basic. It's all to do. It's about true price. They call the CCI, and it uses this infamous, or this one I really like, the 20-period moving average here. So the simple moving average creates this true price. So we're looking for, again, it's looking for a deviation away from the 20-period moving average, and it's the difference between the true price here, the TP, and this moving average of the true price. Okay, don't really need to know. If you want to know the maths, here it all is. But basically, it's all to do with high, low, close, and the actual interval, the spread. So the deviation. So it's a constant. This with CCI, the standard deviation is set at 0.15. Okay, so, but that you don't need to send. You don't, unless you want to write this and code this yourself. This is what you'll need. This. Otherwise, most of us just take the standard indicator off our MT4 platform and click it on, stick it on our charts. Okay, but that's the maths behind it. If those of you that are interested in coding, I know some of you are. So we're looking for overbought and oversold regions. So just like you know, some other oscillators like the RSI, you know, when we get to minus 80 or minus 20 or plus 80, we're either overbought or oversold. The thing with the CCI is it's a bit odd. It looks odd on your chart because it's negative. It's the other way around. We'll come to that when we actually look at the charts itself. So they're good for, you know, has the trend, as I said at the beginning there, has the trend ran its course? Is the trend still strong? ADX is another great indicator for strength of trends. Have we come to the end of the trend? Are we changing direction? Because nothing tends to run up and then suddenly turn around and go back down. Although, as you can see, when we look at the indicator on the chart, as you can see in the shorter time frames, we do get this quite choppy action where we got these V-shaped charts where we go down and then bounce back up very quickly. So again, you can change the settings times to actually smooth that out a bit, but again, it's got to fit with what you want to do, how you want to trade, and there's different ways of setting. We'll look at some of the settings as well. We'll bring up some charts as well because we've got plenty of time today. It's only just quarter past. So weakening trend, end of trend, change of direction. So as it ended. So a good heads up approach, I like to call it. So here for CCI, it comes out of the box, out of MT4 platform as a standard setting for 14, so that's okay. Intraday. There's some of the settings where I actually haven't got this on this chart, but I can show you where there's a higher number and we get a bit more of a bit, you see, the higher the number, the less significant the change can be. But this is a standard setting where we're 14, and we've got this range again, this default setting plus 100 or minus 100. It's a bit odd way around. So for CCI, over 100 tends to be overbought, so you're waiting for a break below to suggest a possible sell position. Doesn't mean that it's going to go down. Just like the standard RSI can be over 70 or even over 80 for a long time. Doesn't mean it's going to go down. It's just suggesting we're in the overbought zone. So with CCI, it's the plus 100 is the default. There are some settings where you can make this 190, and we'll when we bring the chart in, we'll fiddle around with it. You can see that one works quite well as well. But this is a standard setting, 14 and plus 10 and minus 100 for oversell. So at the other end, if we're going down, we're under 100, but we can be under 100 for quite a while. And suggest that we may look to go up as we break over that minus 100 line. Okay, so standard settings 14. It comes out of the box. 20 daily, 80 longer term. I've seen other variants on the 1 hour chart where you use 55. On the 15-minute, you can reduce it down to 44, but extend the range to minus 200 or minus 190 is a good one as well. So, but we'll look at those as well on the chart. This is the standard setting. Okay, so whatever setting, one of the downside, like as I said at the beginning, no indicator works perfectly all the time or works all the time. Never mind perfectly. None of them are perfect. So the issue with CCI is it can be choppy, so you can get lots of false signals sometimes. It's a bit more smooth with the Williams percentage, but we'll look at that in a wee while. So yeah, all right. That's all. Let's change. So if we change the settings, obviously we get less of reactive. So a higher setting than the standard 14, we get less reaction. Okay, so it touches or exceeds that less frequently, but stays there longer when it does. I hope that makes sense. We'll have a look at that on a chart. So if you're playing with the settings, the longer the higher the number, the less reactive it is, but the longer, the steadier the trend. So that's as with most moving averages. Just like the higher the 200 period moving average, is much stronger and tends to trend much longer than and you get touched above it and below it much less than you would with the 5 period moving average. So the higher the number, the less reactive and the smoother the move is. Okay, that's just the way the system's set up. Okay, so let's have a look at an example. This is, I don't know when this is from, but in December. So here we are. This is what we're looking at here. The CCI here set at 14, and here we are minus 100 and plus 100. So the theory again says as we go over, let me change my pointer. So as we go over, so here we are, we're tracking up. So as we go over 100 here, you can see that coincides with this one. And this is a good example because it hasn't worked, has it? So if you're going to, so this is suggesting now that we're going long because we come out of the 100. So that was a long trade up to there. Now we've got this suggestion that we're oversold now because we're over 100. It doesn't say sell it, but it's saying, hang on, we're looking like we're oversold. So we got sideways, and it doesn't break back down till we're back down here. Okay, so again, that's with lots of indicators. They can be lagging, they can be slow, but we've been long get out because we're oversold, we're overbought, and we're starting to look to go short now because we're now back through the 100. Alexander, yes, I'll come to the short time frames in a minute. This is just, they're all defaulted for the daily at the moment. We'll look at the short time frames in a wee while. Okay, so here we've gone back under the 100 and we're now short. Okay, so we're moving down, 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 and now we're into the oversold area. But here we've got here, and we've gone down, down, or now we're down at this level here. So we've got to this bottom here. So do we get out? Well, what you could do now, if you've gone short from when we broke back into the main boundary, we close our short position where we break back out of the oversold zone. So by here we get out. Yes, we missed some of the bottom, but here, because we've been oversold, it looks like we may be going over. So we can close our short position and perhaps have a look to go long, see what's going on. So for a few days nothing happened, then we went back down, but this was still rising, so that was still relatively positive. So again, that could have confirmed a long position here as we've gone. Again, all I'm doing is looking at this CCI set at 14, not looking at any other indicators at the moment, just suggesting that. So that's still suggesting that we've closed our short and we're looking to go long. MACD, if you have MACD on your chart, that's starting to rise, so that's like, that might be going up still. And our RSI now is starting to rise as well. So these two are also in unison. We're you know, all three indicators are all suggesting we've got some more strength in there, and that's when we've gone up. So here we've spiked up. See this great big wick there. On the close of that day, we're still there, but we're just, again, CCI here is just over there, so it's not saying go short or go long. Okay, so the next day we go down, but do we go? No, we go down. 2 big days down. Lots of volatility came in here. Look at all these wicks here, but the CCI still remains within the main channel, so we haven't gone up. Okay, so here we've got overstretched this time. Now, this is a good example of where it doesn't work. So here we've got overstretched. We're over at 100 and or whatever this has come. I think this is saying it's gone to 200. So it's really, this is suggesting it's really overbought at this point here. So we're going into end of the year. It's Christmas and the end of the year, so it's a bit of a bad example. But anyway, so here we are overbought, and we remain overbought. See how we don't really break down. This is a good example. Here, over the first few weeks of January, we're overbought according to the CCI here, but we're not going down, we're still going up. So the moving average here, if you were trading this, you know, this 50 period, the blue line, would have kept you in that one, 220 period making. So CCI hasn't really helped us there, has it? It's only when we break down here, up here, but it didn't, you know, it didn't break down, and then we've gone back up. So if we'd gone short there, we'd have been stopped out probably as we'd gone back up here, because we created a new high, and then we break here. So the wick is telling us, oh, we might go down, but that's the big one there, and that's a nice, that's coinciding with some other indicators here. So we've got the big one here that we're now significantly under the 100, lower than we've had been all Christmas, so, or wherever we are now. This is end of January into February now, and you know, if you'd had the moving average on there, we're also under the 20 period moving average. So that's suggesting that's two short triggers that are there. MACD's under, RSI starting to fall now again. So again, a trend is falling. So off we go down, and again. So again, that's it's interpreting it like that. So you simply can either take it as its standard settings or play with them, basically, as I say, for different time frames. So that's the standard setting. So over 100 and 14. If there we go. So what, by increasing this, so this is 14. So if we let's increase it significantly. So again, the same daily chart, as you can see from what I was just saying before, you get less indicators. So here we're under 100 here. So the big indicator here on this one, the longer term, the smoother time frames, is not until we get to here. So we break in here, and that's saying it looks like we're going, but that's just to see we got over, then we dipped down, we got to it here, but we continue to go down. So we were short, and the big signal is not until we've broken here on this candle here. So that's also just about breaking over the 20. So you could either enter here, or the stronger entry would have been here, this following candle here, when we're nice and up, and then we're long. Now then, the downside of the higher number, where we put CCI up to 80, is that we're still positive, aren't we? Even though we've gone all the way up here, and we've given up all that goody stuff here. We're actually out of the pocket here, aren't we? But this is still saying in. So that's one of the downsides of it. If you extend it too long, it's too smooth. Okay. So it's finding the right numbers. The lower the number, the more signals you get, as with other indicators. The higher the number, the smoother the move, but the less signals you get. So here, on all of this entire time, we've only really significantly broken over this minus 50, gone long at this point here. If we go back to the previous slide, you can see we were under there and there and there and there and there and there. So this is, that's what happens when you change the smooth the number, to play with the numbers. Okay. Where we go? We're going down, aren't we? So that was 14 and 80 on the CCI. Okay. Oh, this is just an example. If you add other indicators to it, it's not really a chart I want to show you. But so that's the simple settings. Okay, so let's just, if we wanted to look at this on other time frames, there's other ways of playing with this. So let me just bring in. Actually, what's we got? We got 55, and that's got CCI. Right. So let's just bring in these. Okay. So for you intraday traders, I knew you'd already be more interested in intraday stuff. So that's 14 and 50 and 80 for the longer term trends. That's just so this is a come along window. It doesn't want to do this window tile. Okay, so what I've got here is the same setup. This is just an example on indexes. Okay, from today. Okay, so here we're at the 1 hour time frame. Now then, for the 1 hour time frame, I would suggest or recommend that you now change the system. So for the CCI for the 1 hour time frame, you want the setting to be 55, okay, and the parameters extended, like I said before, to 190. So 55 and 190 for the 1 hour time frame. Okay, let me actually I should have written that down on the slide, shouldn't I? So I already got that. Okay. So again, it's the same principle though. So we got minus 90 here, minus 190 here. We've got minus plus 190. But so here, this is the 1 hour time frame on the Dow. This just happens to be the 50 period moving average on here, the blue line. So okay, so here we're over. Let's just bring that in there. So come along. Why does not want to work? There we go. So let's just go back here. So it's gone short there. Here you can see we're under the zero line. That's the other thing as well. That's quite added to the movement. So we've rejected. So here we've got to the minus 9. Sorry, we've gone down there and we've gone to the under the minus, but it hasn't gone up, has it? It's not really. So nothing's really happened for us on this one. Here we've dipped under. So this is suggesting might be going further down because we've rejected the midline. Sorry, something I forgot to say. The zero line with CCI adds to the momentum. It's so here we've gone long. Here you can see this. We've rejected this top. We haven't got to the 190. And we've turned down. Okay. At this point, we break the zero line. Actually, that is zero. It is that line there is zero. Okay. So that would be a short. Potential short system because we've got the momentum. We rejected the top. I've got some slides that explain this a bit more clearly, and I'm trying to explain this now in this live chart. So that's the rejection of the top. As you see, we didn't get to 190. We've turned down, but we haven't broke the zero line. We've broken here. This second candle here, the second 1 hour candle here, takes us through the zero line. So that's a added momentum. So that's many players would have got in on that signal there, on that break of this point here. So that would have been a short position there until we got to the oversold position. So again, within the next 2 hours, they would have perhaps closed it as it's touched that. Most traders wait till we get under it. Okay, so some would have got out instantly on that break there, on that 2 hour candle. Others would have held on as we've retraced over the Asian session until we break significantly under, and that was at that point there. So trading this CCI at this setting, 55 and 190 on the 1 hour time frame, triggers here on this quite nicely here on the Dow here. So you could exit 1 could have been there as we touched the minus 190, or exit 2 could have been as we've closed significantly below, which is there, okay, which is that one there. So we've got, so that's the second target would have been taken there, okay. This is the intraday stuff. You know, so we got in at 25934, and we got out at 25796, whatever it is, 40 odd 50 pips. Okay, so in 2 seconds. So now what we're waiting for, we're waiting the next step. We're looking for it to turn up. So we break up here. Okay, so that would have been perhaps our first entry there, as we're going back long now, because we've moved around, and we can see that that's, oh look, we've gone right down. We've gone, let's change that. So that's object list. Let me change that to a different color or different shape. So this is the second. This is this is literally what's happened this morning. So there that's the first trigger here. Sorry, not this blue line. Let's turn that blue line off. Actually, it's confusing me. If it isn't confusing you, get rid of that. Delete. Okay. So our first trigger is here as we've come out of the. Let me just put that back on again. Hope you're all still with me. So here we've come out of the oversold area, and by the time the candle closes, we're up here, and our CCI line is nicely pointing up. It's got a nice angle of 45 degrees there by the time that candle closes. So there we go. That's a fairly steady old entry. It could have obviously dipped down again, but what happened, the next one got even sexier, because by the close of the next candle we were then back over the zero line. So that was another, we could have had you could have added to your position there, which lots of traders do. So we're scaling in and scaling out. So that would have been our second entry, and interestingly this is still open in a sense if you're just trading the CCI, because as you can see we've got over the zero line, but we've run out of a big up movement, and then we've gone sideways since. Are we still in this? Well, it could be. We perhaps, we got in here. We got in here. The rules say, stay in until the rejected. But it looks like, doesn't it? Here, it looks like we've rejected this. We haven't got to the 190 again. We've rejected it. We're coming down. But wait till, again, patience is key. Wait till we come down. We break back to the zero to actually close that long position. Lots of people would have got out. Perhaps up here. Yeah. Again, lots of people would have got out here because we got to this psychological high that we got here. So again, as with all trading, don't ever just use one indicator. But this is a nice little setting. So 55 and 190 for the 1 hour time frame, and this is just the DAX as well next to it, which trades really, really well. Similar sort of time frame here, except actually just bring the DAX over. It's moved less perhaps than the Dow, but similar frame here. This is interesting. See, we've been hit this side. We've been overbought here. Actually, I can't see that one, can we? So let me zoom in a bit more on that. We'll see what's happened there. So here we were coming rejected. We're coming down. Again, this is a good example why, and it's sort of not worked on this one, has it? We've been a big downtrend. The DAX is here in the hour. We get to there, it looks like it was going to go, didn't it? Bounced off there, so we come up, and but as the CCI, see how this doesn't, this is a good example of how it doesn't work. So here we've got rising CCI, excuse me, but we're actually going down, so that's divergence. Sometimes it can be even more interesting. So here we just got over zero, so again that would have, perhaps someone would have jumped in, but we've ran into the 50, so it would have perhaps kept you out from taking that, and we've rejected the 50, and we rejected the zero. So that line there, which is what we started with, this one here could be our sell signal, because we've rejected the zero, the midline. And as you see, when we look at Larry Williams' percentage, it's the same thing. The midline is really, really important. So we've rallied up, but we haven't held the zero, so we've rejected it and turned down. Didn't get oversold again. We're still pivoting around the zero, but it's, as you can see, excuse me, we're in the bounds of what's going on here. So there's not much, but then perhaps another long position there. But we didn't get oversold, so is there much emphasis in it? No. Although we've rallied up here, we're still way short of the 190 as we get to 130. So the midline is quite important as well. So if you're going to want to use this in a lower time frame, the settings I'd look up for 15 minutes time frame. So let's have a look at the 15 minute. We trade the 15 minute. I would look to reduce the CCI level here to about 44. That works quite well as well. So here, CCI 15 minute, instead of being 55 for 1 hour, reduce it to 44. And you see, let's just do that while I've got you here. So there's 3 object list. So object list, indicator list. Indicator list. Go. So here we go. So commodity channel. So we change this. Excuse me. So here you can see the settings minus 90, 190 I should say. So we change the period now back to 44 for these shorter time frames. Nice purple line here. Okay. So we've changed this to fit. Doesn't really change the indicator, but close. So here, similar. Let's just do that again. So here we've got, this is a good indicator. We've got oversold. So let's just do this in this 15 minutes. So here we were going short here. We were overbought. Oh, sorry, oversold. Sorry, it's not oversold, is it? It's just under the 0 line. So that's a negative. That's a short position that which you've added to there. So that's added to your short position potentially, going down, down, down. And you would have taken that out, so that was probably in a flat trade or a losing trade as we broke back over, but you wouldn't have taken it there. You would have there, here. We're now moving, aren't we? So you would have either been stopped out here, or indeed added to your opened up a potential long position as this, because we're now sloping up the 50 period here on the 15 minutes. The 50 period still the blue line, nicely sloping up. It's held that support, so the moving average has helped you as well there. So that would have been a long entry or a closing of a short position, and then return, flip round and go long. Remember what I said at the beginning about sometimes they don't turn around quickly? Well, with these indicators you can actually apply them like that. You can go close a short and then go long straight away. So that's what's happening here, because it's suggesting that's our present. No, actually it's the next one, wasn't it? Let's just get rid of those. Let's move the vertical line to the next hour. Oh, it's 15 minutes, that's why I'm getting confused. So move that one to 8 o'clock this morning. So that's the one there. As you can see, as we've broken over. Actually, it hasn't, has it? It's much later. It's really that one. So it's 8. That's 8:30 really. That's, and again, round the London Open. Interesting. You know, that's when all the volatility kicks in. Candles start getting bigger. So it's really 8:30 when the confirmations actually happen. So 8:30, we're back over the 0 line. It looks to be going long. We might have closed our short out before then, but that's a potential long entry there as we've rallied up, and then we've got oversold. So let's have a look at this one. So let's just put another line. So our entry. Oops, close. Our entry, what time is it? Yep, 20 minutes. I've still got 20 minutes to go through. So there, that's our entry there. And as just looking at the CCI, excuse me. Just take a quick drink. Hopefully you can see all this. We've just rallied, so we've gone up, and we've got oversold. So our heads up for oversold is about an hour later, I suppose, here, as we've gone over there. So that's our hello. So would you get out there? So here, as that closed there, this is peaked, but we don't know that that's peaked yet, do we? Because we remember, you've got to look to the left. We can't see any of this to the right at the moment. So at this point, that has peaked, but we don't know that. So we'll close our long position as we break back under the whoops. As we close back under, it was probably about, what was that, much before that, wasn't it? About 11:15 it would have been, or something like that. 11:15. Oh, I'm hopeless with MT4. Do you know that? There we go. No, not 11:15. Perhaps 11:30 or the next one. Probably the next one, wasn't it? 11:45. We finally confirmed it that we're actually under. There we go. 11:45. We'd started to go. So that's our confirmation. So we got in here as we broke over the 0 line. We went to over. We trended up very nicely. Thank you very much. And then we closed. We closed our long position as we've then broke back under the close of that 15-minute candle. We've closed back under the out of the overbought zone, and we're starting to go down. So thanks very much. We got whatever that is, 2,000, whatever, 25,988 up to 26,000. What's that? 1248 pips there on the 15-minute chart on the DAX. Not the DAX, the Dow this morning. Is that this morning? Yes, that's literally this morning, isn't it? So that's it. You know, play with them. Okay, so that's the. So let me just recap because I think I should have put this on a slide. So let me just actually write it on the slide, can't I? Okay. Any questions on the CCI? And I hope that's answered your question, Alexander. Alexander, about the 5 minutes, I don't know. This is as low as I go, as we say. So 44 for the 15-minute, 55 for the 1 hour. So you know you might want to try 33 for the 5 minute, but I've not done that, to be honest. So it's up to you. Okay. Can I take all the rules and build a trading bot based on? Of course you can, Ulrich. That's the whole point. That is the whole point of rules, and that is the whole point of trading. Many people have rules or don't have rules of trading. You end up losing. You know, if the system says go, go if you trust the system, but you've got to do at least 100 trades with your system to prove whether it's working or not, because you've got no statistical evidence otherwise. You know, 20 trades, you know, you can have lots and lots of losing trades in a row. As I said yesterday and at the seminar on Saturday, you know, in a casino, the roulette wheel, you know, 50-50 black and red. Well, it's not 50-50 because, you know, there's depends where you are in the world, but there's at least 1 0. In American roulette wheels, there's 2 zeros. There's 00 and 1 0, so it's never 50-50. But the record, you know, continuous runs of reds or blacks is actually 32. Who would have thought that? So 32 spins of the wheel came up red consistently. If you don't believe me, look it up. It's called the Monte Carlo fallacy. It's the story of the Monte Carlo casino getting busted is true. It happened overnight. They had 29 on one night. They had to close the casino. Everybody went home. The guy came back the next day, and the 30th spin was also red. And it wasn't until 31 when it turned black. And I think in the US, I think it's 32. But that happened a long time ago, 1913. But you know, the man that broke the Bank of Monte Carlo, it's not a legend. It's a true story. A bit like Jesse Livermore. Lots of people say to me, Jesse Livermore didn't exist. He did exist. He was a real trader. But anyway, Ulrich, hope that's answered your question. So that's it. Simple as that. You know, but as with other indicators, don't use them, you know, entirely on their own. Today we've just looked at these, but obviously use your understanding of candle patterns. Use some other indicators, some other oscillators, some trends like we've got here, the 50 period on here. So actually, let me just write that down on the slides because I should have done that. So let's just, I'm going to change my pointer. Make it a pen. So the CCI, remember, so for 1H1, I'm getting quite good at this. So for 1 hour setups, you want set it at 190. So plus and minus 190. And for M5, M15, the ones ones we've just had a look at, the ones I seen, M15. So for M5, want it to be set to 55. Hey, I don't suppose any of you are enjoying this. I'm quite enjoying this, but so 15 minutes still set at plus 190 and minus 190. You set it at 44. Okay. I'll say the standard settings we looked at that come out of the box as far as the MT4 platform's concerned is what the ones we showed before. So everybody got that. So minus 190 plus 190 for our boundaries, 55 for the 1 hour and 44 for the 15-minute chart. Okay, they're the ones I've tested, they're the ones I've had a look at. Okay, but I say the standard settings is 114, so quite different to these settings. But as you can see, if you play with them, you can find the ones that fit with your time frame and fit with your other indicators as well. Okay, so any questions on the CCI before we go into Williams Plus, because he's only got 17 minutes left. I've spent too long on the commodity channel indicator. No, or am I boring you all silly? Anyway, let's run through Larry Williams quicker. To be honest, of the two, I think I prefer the Larry Williams, but you know, it doesn't matter either way. Play with them add them. Okay, so Larry Williams, he's a real guy, you know. He's a futures trader, he's a stocks and commodities trader, he's a teacher, he's an author. He's wrote loads and loads of books going back to the early 80s. You know, it's probably his two most famous ones are Day Trading Futures Online. This one he wrote here in 1979, ages ago. How I Made $1 Million Last Year Trading Commodities. Larry R. Williams, and it's all proof. He's not making it up. Alexander, absolutely. Indicators are just that, nothing more, nothing less. Absolutely. Never get too hung up on them. You're absolutely right, young man. And this one here is probably one of his most famous ones as well. Long-term secrets to short-term trading. Larry Williams, 1999. As you can see, a lot of these books are a long time ago. He's written stuff recently about tax and stuff, but Google him. He also happens to be the actress, the father of Michelle Williams. She was in Manchester by the Beach or something. That's our last film she was in. Blonde-haired lady, I guess she's married to. She married the guy at Brokeback Mountain, I think. His baby, I think. I can't remember. But anyway, famous family. So Larry Williams, infamous, famous trader in the Albert. What time do you call this? So anyway, you still got 50. You still see Larry Williams, Albert. You're not that late. Alexander's saying it. Can I read this out, Alexander? That's fantastic. I met him personally, took a futures seminar a while ago, and lived not far from him in San Diego. Bravo! I'm impressed, young man. And what do you think of him? Or old man? I don't know how I'm saying old man. I don't know how old you are, Alexander, do I? Yeah, really nice guy, apparently. I don't know. He lives in La Jolla. Very good. I've been to La Jolla once with when I worked for Pfizer. Great guy. Yeah, he looks really nice. He's just, Google it again on YouTube. There's lots of videos of him on YouTube as well. He's really nice, really nice guy as well. Anyway, more to his little indicator that he came up. This percentage, Williams percentage range, it's called, or Williams, because that's his name, Larry Williams, hyphen S. So again, this is out of the textbook, but it's all a bit complicated. But we'll try and simplify it. So, indicates the proximity of the current close to the highest over the observation period, i.e. your time frame. The larger the percentage R value, the greater the deviation from the highest high over the period. The lower the R value, percentage R value, the closer the figure to the highest for the observation period. So it's like a stochastic. It's exactly what it is. You're probably more familiar with stochastics, but this works just as well. So it's unsmooth stochastic, basically. So instead of being smoothed out by the K line and what have you, it's an unsmooth one. So it's a bit more not robust, but a bit more basic, I suppose you could say. So it's smoothing out the fast and it's smoothing out the fast and the slow. Okay. So it's a flip. When it says reciprocal, it just means it's a flip. So percentage R is reciprocal of the stochastic K line. So again, it's a negative number, but it works just as equally as well. You just need to see it on your chart because it's very visual, it's very graphic, and it's very nice to use as well. So let's have a look at this one going. So here up on the daily chart again, there's lots on here. I don't know why I've used this one, but excuse me. So RSI here. RSI, a percentage R here, so we got overbought and oversold. So just like RSI, the settings are -20 and -8 with this range of 100 to -100. So -20 now, it's a bit odd, but let's ignore the negative numbers. So basically at the top we're overbought, at the bottom we're oversold. Similar system, it's just the numbers are negative. That's all. It confuses some people sometimes, but the system's the same. But just like, and then this is another good indication of, nothing works all the time. So here, let's just go back to this one. Well, I'll bring up some real charts in a minute as well, but this is on the slide. So here we've got oversold down here. We've gone down there, and we're breaking up around about here. We're breaking up around about here. Yeah, that's looking to go, and we're off. And again, the zero, we'll come up to the 50 line on this one is the key one. So again, the midline adds to the momentum and the rejection of going lower. So here the 50 line it's not actually on this chart, but I'll bring it up in a minute. It's the key one. So here we've broken over, we've run into the 50, more or less the 50, and it's gone back down. So that's what's happened there. And then it wasn't until we broke through here is the big, and that's probably there, and then we've gone into overbought area, but we came back down, but we were overbought for ages and the line kept going up. So again, just an example of how nothing works all the time. So lots of people were trying to short this because we were in the, especially here, look at that one there, we'd gone up. Oh, that was the top there, it's bound to be big down candle. Yeah, that we're back under, so you know, we'd have been stopped out as we'd gone higher there on that one. So again, no good, no good, no good. Failed breakdown, up again, but interestingly, look, that, you know, other things were saying, well, 200 period, that's our resistance over there, that's the red one there, so big wick, that might be interesting. And look what happened. So we get, so now we're getting a combination of things that are on our side. So we now got a big tall wick to the top there, shooting star. Yeah, it's not the top, but shooting star. Rejection of the 200 period. A percentage R has turned down as well for the third, the fourth time. So here we missed it, didn't work. This time, interesting. So we went sideways for 2 days, and then we moved and we broke, and then we added to our position. We broke through the midpoint, the 20 period moving average. We were under there. Lots of people were like there. It would have triggered again on percentage R there as we gone under 50, and we gone down, 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 and then we gone, you know, oversold, but we gone down and we close our short as we come back out here, there on that one. Okay, so let's have a look at some other examples. Actually, that's not a great one. So the signals and the rules with percentage R. Crossing the 50 is important. It wasn't actually on that line. So again, it's all about oversold and overbought. So crossing the 50 suggests momentum in the direction we want it to go. Also, the other great thing about Williams percentage R, and I'm just like CCR, is this rejection of the levels. So as we're going in one direction, we the momentum can fail sometimes. So we break out of our oversold zone. Let's just go back to here. So we break out of our oversold. Where are we? I'm looking at the wrong one. As we break out of our, that's a bad example. If we break out of our oversold area here, we reject 50 line, which is about there, didn't we? So momentum's ran out of steam, and then we've gone back down, and then it's you know, rejected that and then continued our movement down. We've created a lower low, and then we're back into the overzone. Next time we break out, not much energy. See how it's bent over, and that's because we've gone sideways, and then we've gone back down again into the oversold. And it was only when we broke through the 50 line, this midline here, about here. See how we rejected it that time and then went back down. Here we've gone up. Again, it didn't go up for much longer, did it? But that was much more positive. There have been bigger entries there because we're over the 50. That was a big candle there on the on that particular day candle. It was over the 20 period moving average, so lots of entries in there. But it retraced for 4 days before it then got that big oomph up the 5th day. So there we go. So we've retraced, but we didn't get oversold again. So we're back over the 100, and that's added to our momentum, and then we're back into the overbought area. So trading that up on the day. Lots of pips on that one as well because of the there as well. Okay, so 50 is important. It's all about momentum, and again, mess about with the periods if you want to smoother signals. I know some people that use this up here at the 125 dates. These are like investment managers that are looking for longer trends, less signals, less trades, but big positions when they sort of positions break. These tend to be, I say, 3 to 6 months sort of trades and trends, guys holding big positions for a long time. You know, building their position in as this trend continues. So let's have a look at some of these settings. So here we are. This is a standard setting. Let's just go through the story here. So we've been going down. This is the Aussie dollar on the daily from earlier today. So yesterday, this sell signal. Where did that sell signal come from? Well, it was all in one day. Look at what's happened here with the percentage R. 3 key things have happened in this one candle here. So not only is that a big candle from candle traders, it's just as big as some of these others, and it hasn't gone lower than this level. But what percentage R gives us, Williams percentage R is giving us, is we've rejected this top level. We've also broke through this midline, the 50 line here, minus 50 or 50 line on the same day, and also on the same day, the close of that candle was also into the oversold area. So we got this big momentum going down. So we've had 3 key triggers all completed in one day. So that's tick, 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 rejection of going higher, momentum to go down, and then into the oversold area. Now then, lots of people would have got scared out because we're actually just broken into the oversold area. But as you can see, it's closed virtually on that day here, where it's closed right on the thing. But that's go, go, go. And as you can see, we then went 1, 2, 3, 4 further red candles down. And it wasn't until the 5th day where we closed out because we reversed and we moved back out of the oversold area, and that was our first indicator. So we could have, added to our position on that day as we'd gone further down, or closed half our position here and looked to reverse long. But we've made 110 pips on that move there down, so we're looking to perhaps go long here. So you could have either been risky, risk it again depending on your risk profile. You could have either added long there or waited until the next day to go there, or the real signal was here when we were back over the 50 line. That was the comfortable. So riskier traders would have jumped in here, perhaps less risky traders there, conservative traders would have jumped in here when we'd broken back over the 50 line and more momentum. But as you can see here, that momentum thing we talked about has failed again. We failed to break the 50 period moving average, the blue line. We failed to get back to our minus 20 and it's turned down again, and then it's gone short again the next day. So this long trade, but it was less successful, would have been less successful, and you might have even been stopped out for a loss if you'd got in here or got in here during that day, because we'd then gone back the next day. It's closed all the way back down here, and then we've gone down, we've gone oversold, and it's backed up. So there's two big candles there up, but again it's failed. But you can see this sloping again. The trend was down here. You can draw your little line on here. So this is the percentage Williams at 14. What time is it? 5:02. Right, I best speed up. Okay. So it's a bit simpler to apply. Okay. Alexander says he's pretty funny. Well, okay, I'm not a funny guy. I can't tell jokes, but I'm sure Larry Williams is. So here, if you want more signals, obviously let's lower the number. But here it hasn't actually changed the situation. Here it's exactly the same. So here, the same day, because it was such a momentous day, we've reduced percentage R to 7. So again, we've got the rejection of the 50, rejection of the oversold area, and again we've same day, same momentum through the 50 and into the oversold area. So again, similar move. We get out here as we turn around, we go up, and we go short on that one as we reject the as we come out of that. Added to it on that day again, but again you see that one would have that wouldn't have worked here because it's such a big candle that takes us into the sorry, that we break that date. We go down, and then by the end of the day we're back up the other way. So that one would have failed. But again, you see, you might have added to it. Thought, oh look, we've rejected that again, and this is, other things are suggesting more short, because with 50, it's still lower highs. These highs haven't broken up, so that, and then we break, that would have been another perhaps entry there as we've continued this momentum down, and then we've got another nice short position there. And currently, dollar, as we all know, if you're following the Aussie, it's under a lot of cosh. So here we are, we're way up here. This is what percentage R is saying on 7. We're still very much overbought. It's just not got up. See how it's not got up? So we're still short this one. This is what this is telling us here up on the daily time frame for. So 7 gives you a bit more flexibility. So play with that one as well. But I say the standard setting is 14, and it's minus 20 and minus 80. You need to put the 50 line on yourself manually. It doesn't come out of the New York session in 5 minutes. Is that right? Okay, Alexander, very good, very good. I'm nearly done. But you know all this if you've met Larry Williams. I'm so jealous. We'll have to talk offline, young man. Anyway, so up at the other extreme, we take it up to 28 or a higher number, we get less indicators. But as you can see, it's a bit more confirmation here. So here we don't get to the because we're up at the 28 low, we don't actually get up here. So that's another confirmation, but that is a double rejection there. We go short there. It retraces, but we're still short because we're under the zero. And as long as say we have not got back over it into the oversold. So, and then you could have added again there where we've gone back under the zero line again. So 2 entries. So we've got an entry there and an entry there, just at the same sort of price, I would guess, but a few days later. Excuse me. And then the big breakdown. There we go. And then we close it out there. So we got in early there and there, and then we similar sort of move. So another whatever many pips that was, 100 odd pips twice. That's in this case. Okay. You get my point, hopefully. They're very simple, they're very clear, I like them. I say, do I like percentage R better than CCI? I don't know. I like playing with. I like CCI playing with the numbers. Same with percentage R. So I've talked too long as usual. But here's another one on the 15-minute. This is the 7 again. I don't go lower than 7, but here again this morning. Then we were down over in that 15-minute. So we were from this going short here. We turned out of that in the next 15 minutes. We were over the 0 and we closed that candle there. So that was our screaming entry this morning here at 71.05. Up we go into the overbought area, but it's still going up, so that's fine. Just stay with it, stay with it. When do we break back down out of the overbought zone? There, close of that that candle there. So 15 pips on this is obviously only 15 minutes, but 15 pips, very simple, very straightforward moving here with the percentage R there at 7 on this 15-minute time frame as well. So this works on this time frames as well. So there you go, that's 15 minutes, 1 hour, and the daily, all quite effective little oscillators. 7, 14, or whatever you want to go. So thanks for your time today. Tomorrow, trade the news with Otto. Sorry, any questions about Williams' percentage? He's got lots of books, and lots of them are very good. I haven't actually owned any of Larry Williams' books, but perhaps I should buy one. Okay, Matthias, no problem. So trade tomorrow, live analysis Tuesdays, stochastics. We go back to the perhaps the stochastics, which I don't know seem to be more popular, more people use. I don't know why they don't use percentage R and CCI more, but stochastics is by far perhaps the most popular of the oscillators. Fascinating title here, Donald Trump and the effect of the dollar and Forex. I'm really looking forward to that with Otto. Live analysis on Tuesday, as I say. Nectarius will be doing an outlook for the final quarter of 2018. Very, very important quarter, the fourth quarter. And then RSI, another traditional, stochastics and RSI, the more traditional oscillators that most people use, and I certainly use on a day-to-day basis. But don't forget these alternative ones. Have a play with them. Give it a different perspective sometimes, or add to your perspective of your traditional indicators that you're perhaps more comfortable with. So thank you for your time. Those of you that are in South Africa, we're coming down to South Africa next month. We're in Polokwane on the 17th, Durban on the 19th, and Cape Town on the 23rd. So click this link and come and join us. See me live, see us live, ask all the questions you want. Pred and Prossers, just like Alexander Pred and prodded Larry Williams, but we're in South Africa, not in San Diego. But there you go. So my book list, Reminiscences of a Stock Operator, key book if you want to be, it's just timeless. 1923, all about discipline, all about psychology of trading. Get Trading in the Zone by Mark Douglas. Elder and Van Tharp, very good teachers. Jack Schwager interviews with some of the best traders in the world. In his Wizards books, these are the top 3. I should probably have added Larry Williams today, but yeah, he is a good guy. So Trading in the Zone, all about yourself, understanding yourself, what you need to do. Segam, no problem. And some other books. If you're brand new to Forex trading, have a look at Anna Cooling's Forex for Beginners book. It's a very nicely written, very easy to understand. Some nice charts in there. And she runs her own website as well. She's a trader with her husband, annacooling.com. Nicholas Taleb, great writer. I'm just currently wading through Skin in the Game, his latest book. But Fooled by Randomness and Black Swan, very important. Anti-Fragile was the one that came out 2012 as well. Great set of books. And Michael Lewis, obviously anything to do with Flash Boys, The Big Short, all about Liar's Poker, all about Wall Street in this week of Lehman Brothers going bust 10 years ago. It's all very pertinent. So thank you very much. Watch our analysis or read our analysis on the analysis page. Join us at webinars at hotforex.com if I've spoken too quickly or something you didn't understand. I've confused the bejesus out of you today. Sorry about my croaky voice. And send me a friend request, Stuart HotForex Cowell on Facebook. Lots of stuff goes up on there when we're active, and all the copied posts are on there as well. Thank you, Amir. See you all soon. Thank you very much for everybody. Thank you for your time. I really do appreciate it. Do feel free to contact us and send us an email if anything that you don't get or you don't understand. Okay, take care, everybody. Thank you. See you again next time. Bye-bye.